All right, here we go. Lesson 2, why the price and the market moves the way that it does. It's very important that you understand the motivations of the individuals that are in the market, because if you understand their motivations, and this will go back to your introductory overview, our concept presentation. If you understand why the market moves the way it does, if you understand why individuals take and make the decisions that they do, that will help you better anticipate what's going to happen next, and it will help you to better interpret the next move or moves that are happening. Now, this will be clearly an introductory level explanation. I always encourage you to search outside resources, references, and continue to understand the intricacies of the market, and every market has its own intricacies. But all of the markets work on the same concept of greed and fear. All right? So we're going to, and greed and fear, there's greed, there's fear, there's sleight of hand, basically a deception, there's panic, there's reactions. So there's a lot of levels, but basically what we're looking at is we're looking at let's make a couple lines. Let's talk about this overall move here. Here, and then we'll talk about this move. No, we don't want that. Where'd that go? Here we go. We'll talk about this move. We'll talk about this move. And then you'll see the reverse. What you've got here is you had a consolidation right down here in this lower left. There's your consolidation. And then you had a breakout. The breakout of the consolidation started right here, and it moved. There was what they call an impulse. What you had here was an accumulation. This was mainly your large institutions, your larger players, your bigger money. They call the smart money. And they were basically building their position. They were getting people into the market so that the bottom line is there has to be holders of whatever asset or instrument in the market for the market to then begin. Okay? They if there's no players on the game and I come to the field with a ball, I can't, if I just throw the ball, it's going to just land somewhere. No one's going to catch it. To just really simplify things. So you need other players on the field. So everybody's showing up on the field. Everyone's showing up on the field. They're positioning themselves one place or another, waiting to see, which way the ball's going to get thrown. Is it going to go up? Is it going to go down? They're not sure. Some of these people think it's going to go down. Some people think it's going to go up. And it bounce back and forth, and they get their positions. And some of these positions are scalpers who just literally are just picking off money, and people who are losing money just inside that little tiny window. But then finally, your market breaks. It breaks out, and what will happen is your big institutional entities will say, okay, we're going to start buying this asset in large quantities. And so somebody will make a move. That will trigger someone else who's watching the market in the bigger arenas to say, okay, yeah, you know what, we're up with this. This is what we want to happen. We're going to push this price up. Now this may be because of a fundamental issue. Just it may be that a court case occurred. It may be that any number of things have happened that will lend credibility to that position, that the market needs to go up, that the value of this instrument is going up. But in most reality, that those fundamentals, those were already known. The people who know. Now there may be occasional critical situations that are unknown. The result of an election may do something. A natural disaster obviously is not necessarily predictable. However, it's not like these big players weren't aware that it was typhoon season in China. Okay, so they were prepared for a typhoon that was going to cause mass destruction and that was going to interrupt inventory flow. Whether it be in the food distribution, whether it be in electronic parts, if there's an embargo, if there's a war. But it's not; these things are not unanticipated. So you may have a trigger, but they already knew basically what was going on. So at some point, they decide, yep, this is a good enough excuse for us to make this move. So they make the move, and they start piling in, and then your chart watchers, your smaller potato people will start to kind of get in, and you'll get this little wave. Okay, you'll get this nice little push here, and the value of that price will go up. And if you happen to be holding here, you're going to get more value. Now, what happens right here is a couple people just said, hey, you know what? When I say people, this could be a small retirement account. It could be, a smaller group of advisors. It could be a certain group of individual retail investors who basically, for whatever reason, something happened. They saw a trigger, and they're like, yeah, we should probably go ahead and we should take our profit. So they just start selling. They're saying, hey, look, this item was worth X number of dollars here. It's now worth more dollars here. This asset, it's worth more dollars here. I'm going to sell. I'm going to take my profit. So they start selling off a little bit. But there's not really that many sellers. The big guys are not done yet. Okay? So you get this little bit of a sell-off, and some people take some profit. But then that basically fails, and then there's more upside push. This is where really basically the general public starts to be getting really excited. This whatever this is starts making headlines. People are talking about it on their, they're having discussions on their lunch break about their portfolio, whatever the case may be. And so you'll get this nice push here. And then you'll have some profit taking. Okay? More people said, yeah, you know what? We started out over here. We started this move based on this claim that an event happened that triggered our move. But now that's been long forgotten, and now this is just kind of moving because it's moving. This is more the crowd. So we're going to go ahead and take some of our profit, and we're going to clean up just a little bit. We're going to sell off, and we're going to put some of this money in the bank. But we're not done yet. We're still holding. These guys here are still holding for the most part up in here, because there's that one more surge that will come in. And these are the people that were just like, oh, I don't want to miss out. These are people literally calling at the end of, they're calling their brokers, they're getting online, they're buying in. A great example here is recently is the GameStop situation. Okay, these are those people, or the most recent rise in Bitcoin. These are people that just literally are buying Bitcoin on their phone because they heard it's going to go up, and they don't know anything about it. They literally know nothing except for Bitcoin's worth way more than it used to be, and so they just buy it. They literally buy it on their mobile phone, and it just pushes up a little bit more, and then your big investors start selling off. They start selling off. They sell off pretty deeply. A bunch of these guys in here have taken their money, but they're not done quite yet. There's a little tiny pushback, and then they start to sell off, and then all of these people in here, look, it just basically what you're looking at is just all these people that bought, all these people that responded to this move here. They're all still in the market. They still all own pieces of this. All these people right here. I'm going to change this color. No, I want to make it green. There we go. Sorry, I want this to be green. All of these people here still own this asset. These people up here bought, and they're going to lose their money. That's it. We came to the top, and then when all these people here that bought up in here start seeing the price drop, some of them are trying to, if I bought in here and it comes back to the price that I paid for it, if it goes down just a little bit more, I'm now losing money. I was gaining money. These people here, they started losing money right off the bat. So they panicked. They sold off. There was some kind of a news event, or somebody played in a little bit more so that people would hold a little bit longer. And then finally they all just panicked. They just panicked, and they just said, yeah, get me out of here. I don't know what this is. I don't understand what's happening. There'll be some sort of a news event that will explain it away. Some court case, some election, some corruption case, something will be on the news, but it will be an explanation for why this happened. Well, if you're just now telling me about this event on the news, then how could that be the reason? And they basically they tried to infer that these guys down here, these big money guys, these guys have just been waiting for a reason. They try to basically say, hey, they sold off. No, that event had nothing to do with their selling off. They were taking profit. They ran the price from here. They bought in here. They took profit, and they sold off profit, because anything, if I sell it here, I make profit if I bought it here. If I sell it here, but I bought it here, I make profit. Anywhere that I sell it above the price that I bought in, I make profit. And the panic just induces and runs the price back down. And then guess what? The price is cheap. So we get to start the process all over again. But this time we go higher. All right? When I say we, I mean the institutional investors. I mean the people, the companies, the banks, the hedge funds that buy hundreds of millions of dollars worth of a position over a period of time. Not you and me. We are not we. All right. One day, hopefully, we can be part of me. But honestly, I think it's better just to watch them and move when they move and get our piece and leave them alone. That is my position. I know a lot of people don't agree with that, but this is why this happens. This is how this happens, and it happens over and over and over and over and over. Okay? And now it works in reverse. That's another lesson, because we can start this process up here if we want to, and we can sell, and we can run the price down. And then just when people think that the bottoms, this whatever this asset is over, we can then turn around and run the price back up. So now we bought it really cheap. We pushed the price down, then we bought it, and it goes back up. And then we make a profit because the price was up here. And so the difference from this point to this point is significant, but the difference from this point to that point is ridiculous. All right? And then it works in reverse. That is the cycle. Those are the motivations. Anything that anyone else tells you as far as you've got to learn the fundamentals, you've got to understand, yes, those are pieces, but you're never going to be a person who makes a move in the market that moves the market. Let me not say never, because that's not 100% true. The likelihood of you being that person is very distant, and right now, if you're going to use the market to get to that position, you need to understand the lane that you're in. All right? So, again, I recommend that you now watch the charts. You get used to seeing the activity, because this is going to help you when you go into live trading, for you to understand what's happening, recognize what's happening, to have seen it 10 times, 50 times, 100 times already, and so that you become familiar with it, so that you know basically what to anticipate. It will not always work exactly the same, but the more familiar you are with this market movement and these market motivations, the more likely that your accuracy is going to be at a level that's going to be profitable. Good talking to you. See you on the next one.